Hey, what's happening YouTube? Hope you guys are well today. Let's do a little trade review. So in this video, I wanted to go over a few trades from the last few days, Monday through Wednesday. Today we're Wednesday, October 15th. And generally we've been doing pretty well here, scalping these NASDAQ markets like usual. So no complaints about that. But the thing is, you're only as good as your next trade. So as long as you're remaining humble about your approach, you know, your past results will never be indicative of your future results. And that's sort of the way I approach these markets. Even though it could be said that this strategy is working quite well, it has a high win rate, this and that, but it doesn't matter because if I'm not consistent, then it won't matter. A few things that I've noticed have greatly improved my performance, I guess, has been, number one has been cutting coffee in the morning. I only drink coffee later, like afternoon. And I noticed that cutting it in the morning has greatly improved my ability to focus and see the trading setups much clearer as they come through. And one other thing that has greatly improved my overall mental outlook is just, you know, as a scalper, being focused completely on what is happening right now in the market and not concerning yourself with larger moves that traders tend to be looking for. And you know, this comes with experience, because when I was first getting into trading, you trade off of the larger time frames because the markets move slower logically, and often you're looking for larger moves to occur. But the thing is, with the nature of these markets, the way they auction around, there's lots of opportunity in both directions based on the order flow and certain key price points. So once you learn how to pick up on that stuff, it becomes quite easy to scalp on certain prices. Sort of a method that I've been working on for a while. Every week I'm perfecting it, and you know, I got to thank a few friends of mine that have been helping me along the way. One of them is Emini Osman, Emini OS on Twitter. He's a cool guy and, you know, smart trader, and he helped me a lot about learning how to trade the NASDAQ properly. You know, I expressed my gratitude to him. We're green the last 3 days. We're doing all right, except for today. I had a few losing trades in a row and then I just stopped. So I want to talk about one other thing that I noticed contributed very well to my overall ability to avoid giving into that gambler's tendency, is just, you know, being more disciplined with the fact that trading is just a risk activity. It's risk capital. And if I'm hitting my limit of losses on the day, there must be something wrong. It's either not my day or my method is not performing the way I thought it would. Therefore, I'm not reading the market correctly. Therefore, I need to stop. This is not an easy thing for traders to do, especially when starting out, because when you're starting out trading, you're always under the impression that you're going to be able to make money trading. And when you lose money trading and lose money consistently, you start going on this path where you want to make all your money back. And again, that's the dangerous place. And you have to pretty much know when to stop. And this is hard because when you're first trading, you're developing a method, you don't necessarily have the confidence in your method yet. Whereas when you do have the confidence in your method and then you're still losing money, then you're even more prone to gambling. So there's this big, you know, area of demonic behavior that can happen if you give in to those evil tendencies. That's why I highly recommend you guys to go check out the playlist that I created called Channel Highlights, where I highlighted all those videos where I talk about the gambler's tendencies. And definitely you should go watch that. So today I started off pretty well, and then I had 3 losers, and then I was able to just stop and kind of go away. I stopped for good after my 3 losers, basically, because I wasn't reading the market correctly. I admitted to myself that I was wrong, and I admitted to myself that trading, you know, is risk activity, and I'm not going to sit here blowing up my account trying to be right because the market is telling me that I'm not reading it correctly. So these are the conversations you have to have with yourself when you're losing, and you need to basically come to terms with what it is you're doing, accept that you lost, and just stop and come back later because your method is clearly not performing well. All right, let's move on here, look at a few trades. All right, here's an example of a trade from yesterday. That would have been October 13th. And this is a bit of a breakout trade, all right? I categorize it as a breakout trade because it's the type of trade that you just get in when the market has momentum and that's it. I'm not necessarily leaning on a specific price, but I'm just looking for the market to see more upside at this point because we're breaking above the even number, 12,100 here. And you're gonna see, let's take a look at what happens here once the market trades above these even numbers. So let's watch how it trades up to here, first of all. And you can see that there's strong buying pressure. The morning there was a lot of selling. Therefore, that's why I was interested in getting long up here. This was a point where the shorts were likely going to be stuck and start giving up, basically. So here we go. Keep an eye on the inside prints here. And you can see that there's buyers hitting in here, and they're kind of slowly creeping their way up. There we go. So I get filled below the even number. I was interested in getting long here, so I just hit the button. It wasn't to trigger a market order, it's the button to buy at the bid. And every time I press that button, it seems to fill the order right away. So I noticed the fills with CQG are quite good. Here we go, we're trading at 100. Now watch the inside prints. There's some sellers coming in right there. And there we go, more buyers. They lift the offer. Now, this is where it gets interesting, right? So this is officially considered a breakout trade because I bought this high. So I'm not necessarily leaning on any price here. So I'm looking to protect this trade. I'm looking to be risk averse in this situation because of the fact that sellers could enter at any moment, and this could be a trap, right? In terms of a target, I'm looking for the market to pop above these highs here. So I was looking for about 08 to 0850. So you see me putting in a stop right there, and then I get stop break even. At this point, keep an eye on the tape, and you can see that we sold off to about 97, and then we rallied back up. Now watch the market trading here. You can see some sellers are hitting in, but we lift right back up to 102.50. So that tells us that the sellers are not really proving anything at this point. So again, they're absorbing here, but they can't trade lower. And then sooner or later, we're trading at 450, 650, and all the way to 8. So I was risk averse on the initial entry, which in fact was probably a good decision. And I'm trying to avoid hindsight as much as possible because you did see that it went back up and hit my target there. But there was an opportunity to get back into the trade there, which I did not take. So when I saw the sellers dry up and continue to get absorbed around the 102 zone, and then the offer lift again, that was an opportunity to get back in for a scalp, probably until that 850, which what I was looking for originally. So again, categorize this trade as a breakout trade. Important to be somewhat risk averse with breakout trades, depending on the situation, because you never know if that is going to be a massive fake out. But you're basically anticipating that it's not. That's why you're buying at that point. But there's still a risk that that can become a fake out. That's why I was more risk averse for that trade. This was a trade from yesterday, October 13th, and this was a very interesting trade. So I want to share this one with you guys because it's the type of trade that the market is giving the impression of one thing happening, but then all of a sudden it does something called what I would call a wash move, and then it moves quickly back in the anticipated direction. And there's a lot to learn from this trade. So I would consider this entry somewhat impulsive because I wasn't necessarily leaning on any important price. And again, this was slightly dangerous at this point. So this is typical movement for NASDAQ. All right, so take a look here. We saw a bit of a pullback down to about this 54, and now we're rallying back up to about this moving average here, and we're looking for some shorts to get tested out of their positions around this point here. Okay, so that's what kind of got me interested long, but again, I believe that this was a bit of a late entry and I had to see it a little sooner than this. It'll take a moment, but take a look at this. The sellers are pretty dry, and we fill at 75. Not a great fill. Now watch the inside prints here. So we're trying to trade here 76.50. Couple of sellers we're trying, we can't quite do it, and then we start to trade lower. Now watch this trade. Okay, so you can see that my stop is there down at 65 quarter. So if you're looking at the chart down there, you're going to see that that's right around where the moving average is. That's not necessarily a great area to put your stop in this case. You know, if you're going to be long at this point, you have to be seeing momentum in your direction immediately. You're not going to really want to keep a stop right down there. So that's why I consider this trade slightly more on the risky side. Let's continue to watch what happens here. So you can see buyers continue to hit into these 70s, and we're not necessarily seeing any notable signs of weakness. So there we go, trading higher again, 78, and I'm in profit. We see a bit more sellers. And at this point, the market is sort of stalling right around my area of entering the trade. And it's not necessarily giving me what I was initially expecting, because there's certain types of trades that the move normally happens quickly. So once you get the feel for the way the market trades, you kind of get the feel for when the moves happen and when they don't happen. So if the move is not happening by a certain point, then you're probably wrong, so get out temporarily. So this is the type of trade where you probably want to get out temporarily. So there you go. You see the sellers come in. Now watch this. Boom, right down to 63. So that's an example of a wash sell all the way back into the range. Now take a look here. We trade down to 63, and then some buyers come in and the thing trades right back up to 70 pretty quickly. So here we're in the high 60s. Buyers come back, the offers lift, and we're right back at 75. So that's an example of a wash sell. And I've heard that term before, but I think that's the right term to call it. So there you go. It trades at 84 after that massive sell down, and then it trades back up. That was an interesting trade. And again, the type of trade where the move is not happening, there's a high risk of the opposite happening. Just take a break even temporarily and wait on the sidelines. And that would have been a great example of wait on the sidelines. You had the massive push down, the offer lifts back up, and then sooner or later we're trading back at 75. Anybody who shorted that move or anybody who got stopped out of that move is now trying to chase the market back higher, and that's what's going to fuel a move to the upside at this point. So we trade up to about 85, and that would have been, you know, the approximate target, about 87 maximum. All right, guys, so I'm going to conclude the video there for today. I hope you enjoyed it, and I will see you in the next one. Take care. Bye.